Hello, in this presentation we will record the purchase of furniture and record investment into our bookkeeping problem in Excel, keeping in mind how that same transaction could be put into accounting software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. We're going to start off first looking at how it could be put into the software and then jump over into our Excel problem. So if we were to enter an investment into something like QuickBooks, we may want to do that within a register. This is one way we can enter this information. So if we had an investment of $12,000 and we purchased it with cash, for example, if we got stocks and bonds that we were purchasing or investing in, one way to record that transaction into QuickBooks would just be to go to the register and enter that information, and we would have the date. Then we would have the amount would be the payment, and we would need to choose some other type of account, in this case the short-term investment. That would typically be enough information for the software to then record the debit and the credit, know which account should be increasing and decreasing, the register increasing cash, and the other account being the short-term investment that will be affected, and the financial statements will be created with just that information. We then have a purchase of furniture. That too, if we paid cash for the furniture, could just be entered into the register or a check written for the furniture. So we, in this case, are buying from Office Depot. It's in the payment section, $16,000, and then we just need to name the other account. Once again, the software knowing that it being in the register for cash, reducing then cash, the other side of the account going to the furniture and equipment account. If we see this one more time, we were purchasing furniture once again for cash from a different vendor. We would just name the different vendor. We would have the payment here, and we can put this to furniture and fixture. So note now that we're basically dealing with transactions that will be dealing with cash, and therefore within the QuickBooks system or within accounting software, we can enter this information into the register. Later on, we'll talk about transactions that may have partially cash transaction and not all cash, or purchase something, in other words, in part on credit, and how we would deal with that within the accounting software. Now let's jump over to the Excel and see this information input into the Excel system. We will now enter this same information into our Excel worksheet. In the last presentations, we have set up the worksheet and entered some of the beginning balances, and then set up our loan here and the owner investment of the 65 and the loan of the 50. And now we're going to include these three transactions, including the transaction for an investment, a transaction for the purchase of furniture and fixture, actually two transactions for the purchase of furniture and fixture. We will do this with a journal entry. So we're going to record the journal entry to show how this can be done. We will then post that journal entry to the general ledger, and that will create the trial balance, which will then create the financial statements. First transaction is that we are going to invest in Vanguard, putting money into some type of investment, which would be including stocks or bonds or some type of mutual fund possibly. We're going to take the money out of cash then. Cash is going to be going down. We're going to put it into another short-term investment, and that will be this account here. So note, when we record this in a system like this, we need to know basically both accounts that are affected. Whereas when we put it into QuickBooks, we really need to know the cash account and the other account, but we may not need to know exactly which account type they're at or how to increase and decrease them, meaning should we debit or credit the accounts. In this case, we're going to say that the checking account is going to go down. I would always think of cash first, and therefore we're going to do the opposite thing to it, which in this case would be a credit. So we're going to credit the cash, decreasing the cash. I'm going to copy that, right click and copy. Scrolling down to the next place where we will put this information, we're going to put the date, which will be 1/4. Right click, and actually I'm going to put it on the bottom. Right click, so I'm in B27 on the bottom of the date, putting the credits on the bottom. Right click and paste it 1, 2, 3. I'm then going to indent, which you don't have to do, but I'm going to go into the Home tab, Alignment, and Indent. And then the amount will be for a credit of 12,000. I'm going to put a negative and a 12,000, no commas. no brackets. Once we select enter, we see commas and brackets from the formatting. We will then debit something for the 12,000 and enter. And now we just need to know what account that will be that we will be debiting. And that, of course, will be the short-term investment. So it's up here. It's another asset account. We know that we are going to debit it because we credited cash. That's the good thing about crediting cash first. It'll tell us what we do with the other account. But if we think about it, just to double check it, we'd say that this is another asset account. All assets pretty much have debit balances. We need to make it go up, so we need to do the same thing to it as its normal balance, which in this case is another debit. So we're going to copy this, right click and copy that, and scroll down and put that in B26. B26. Right click and paste 1, 2, 3. So note that you don't have to scroll up and down to do this. We could just type these items in here and just type this information. We don't need to have any formulas here, but the copying and pasting does make it useful and helpful for us not to have different amounts typed in there or some type of variation or spelling errors. So now we're going to go ahead and post this short-term investment first. If I scroll up, short-term investment is 1, 2, 3, 4, 5 accounts down here on the trial balance, and therefore will be at 5 accounts over on the general ledger. We're going to go ahead and freeze the panes, make this a little bit easier on ourselves by clicking up here in AJ1. Then go into the tabs up top. We want to go to the View tab, and we want to go to the Windows group, and then select the Freeze Panes item and freeze the panes. Then we're going to scroll over to the short-term investments. So once again, we're in the assets section in the green area. We're looking for short-term investments. Here it is in AU15. AU15 is what we want. And we're going to say a formula, or put in a formula, that will then bring over that 12,000 to AU15. We'll do that by saying equals and then just point to that 12,000. Once we select enter, it will increase this balance here to 12,000, and we will also see that balance on the trial balance within short-term investments that being generated from what we just input. Next, we will be crediting cash. So here's cash that we will be crediting in the journal entry. Here it is on the trial balance. First account, therefore first account on the general ledger. This time we will be crediting cash. Now we can't quite see it in the full in the same screen. So if we make this a little bit smaller, I'm just making this a little bit smaller, then we can see it. So this might be a bit small, but I'm in AN11, and we're going to say that that equals that 12,000 there. So we're going to say this equals, and then point to this 12,000. And once we select enter, it's going to bring the cash account down. We're doing the opposite thing to it as its normal debit balance, bringing that account down. All right, and then this is our new balance, 128, which is found on the trial balance. Going to bring the size back up to 120. There we have that. And we are back in balance down here. So the trial balance is up to date, and it has been created from the general ledger, and the trial balance would then be used to create the financial statements, which we will see after we enter the next couple transactions. The next transactions being the purchase of equipment for cash. So we're going to say that we're purchasing equipment, and that means that it's going to be another asset account. So we're down here, furniture and fixtures. This is what we will be purchasing. It's an asset account. We're going to increase it by doing the same thing to it, which is a debit. And I should think about cash first. We're going to pay for it just with cash. So cash has a debit balance. We're going to decrease it because we're paying for equipment, and therefore we're going to do the opposite thing to it, which is a credit. So we'll start with cash. I typically would recommend starting with cash. It's easier to know whether cash is going up or down, whether to debit or credit it. So we will copy cash, and we're going to scroll down. The date of this transaction is going to be on 1/9. We're going to put this on the bottom of the date because the credits typically go on the bottom. Right click and paste it 1, 2, 3. The amount will be in cell D30, that amount of negative 16,000, and enter. It'll format that with brackets and the comma. We will then debit something for 16,000. That debit amount there indicates that we need some account. And that account, of course, as we said, was the furniture and fixture, or is the furniture and fixture. So we will copy that in AJ12, right click and copy. Scroll down to that cell, B29, right click and paste 1, 2, 3. We're then going to indent. I'm going to indent. We don't have to do this, remember. But if you want to, you can go to the Home tab, Alignment, and Indent. And you can also just double click and click the spacebar 3 times. That'll work as well if there's some kind of formatting area or problem. Then we're going to post this once again. Furniture and fixture, if we scroll up, last account before we get to the payables, and therefore it will be the last account before payables on the general ledger as it is here on the trial balance. We're going to then scroll over to furniture and fixture. Just go into the right, just tap into the right. I see orange accounts here, so it must be down here somewhere on the bottom. Furniture and fixture, so there we have it here in AU37. I'm going to select equals and then just point to that 16 in our journal entry. So that's going to be equal to C29. Again, you want to have the formulas as much as possible. Once we do that, it's going to increase this balance to 91,000. Then if we scroll back over, we're going to see that 91,000 up here, 91,000. We'll also see that we are out of balance by 16,000 until we record the other side to the checking account for 16,000. That's what we will do now. So we'll scroll up to the checking account. That's going to be this first account here. Therefore, it's the first account there. We're going to be in the credit side, and we want to be in AN12, and we want to pick up this amount down here. So we could just scroll down and do it. If you want to try to see them both in one window, though, you can make this a bit smaller. I'm at 120%. If we make it small enough to see, there we can see it now. I'm in AN12. I want to get to that 16. So we're going to say that this equals, and then just point to that 16 there. And this 128,000 then should go down because we're doing the opposite thing to it as its normal balance. It being a debit, we then crediting it, bringing the balance down from 128,000 to 112,000, bringing this back up to 120%. Down here, we see that 112,000 right there as well in the trial balance. We also see it down here, or we don't see it down here, but we see that we are in balance down here, which is also a good thing. Now we're going to do the last one. We're going to have one more purchase. That purchase is going to be on 1/11. And we're going to purchase more equipment here. So it's going to be, in essence, the same journal entry. We're purchasing more equipment. So therefore, we're going to say, is cash affected? Is the checking account affected? Yes, we're purchasing it with cash. Therefore, we're going to decrease the checking account. It has a debit balance. So we're going to do the opposite thing to it, which is a credit. So we will copy the checking account. Scroll on down. We're going to put that on the bottom. The credit portion, right click and paste it 1, 2, 3. We're then going to indent by going to the Home tab, Alignment, Group, and Indent. And the amount will be in cell D33, a credit or a negative 7,000. And enter. Then we're going to have a debit here in cell C32 for 7,000. And all we need to know, enter, will be what is that account going to be in. Once again, we are purchasing furniture and fixture, and therefore it's going to go into the furniture and fixture. We already know that it's going to be debiting that account because we credited the checking or cash account first, which is the great thing about doing that, dealing with cash first. However, if we double check that and see and think through the debit, we can say, well, the furniture and fixture has a debit balance. We need to increase it. The way to increase things is to do the same thing as its normal balance. Since its normal balance is a debit, we will then be debiting it to increase it. So we're going to go ahead and copy this and scroll down. We're going to be in cell B32, right clicking and pasting 1, 2, 3. So there's our transaction, once again, looking very familiar to the one above it. And we're going to go ahead and post this now. First, go into the furniture and fixture. So here it is, last green account, last asset account on the trial balance, and therefore last asset account on the general ledger as well. Scrolling over to that last asset account, we're going to go down here, scroll down, here it is, it's in cell AU38. AU38. We're going to select equals and point to this 7,000 right there in C32 and enter. Note that if you're having trouble maneuvering around and you put everything in the exact same cells, you could just type in equals C32 and that'll work as well. It'll increase this amount because we're debiting a debit balance account, doing the same thing to it, increasing the balance from 91,000 by 7,000 to 98,000. We scroll back over, we see that we are out of balance by the 7,000 because we haven't yet recorded the checking account item, and there's the 98,000 here. Now we're going to go ahead and record the checking account item there. We're going to record it in the checking account by recording it to the general ledger in the next open area, which will be cell AN13. AN13. So we want to pick up this number here. We want to pick it up there. I'm going to make it a little bit smaller again. I'm in AN13. I'm going to make the size a bit smaller so we can see the whole thing once again. And now we're in AN13. Going to select equals and point to that 7,000 we want there that's in D33. And once we select enter, should decrease this running balance to 105. Making this a bit larger again, back to 120. Note that you could just type in D33 equals D33, that, you could type that in, as long as your journal entries are in the same area as they are here, and that will work as well. Now we can see we're back in balance here on the trial balance, meaning that the total debits, if I were to add them up, the total debits here, equal the liability, the total credits. So debits equal the credits, meaning the debits or positive numbers as they're represented in Excel minus the credits or negative numbers as they're represented here in Excel are in balance and equal if we subtract them out. Note that we can also, once again, go through this and just look at the accounting equation. There it is, assets, there are the liabilities, and that equals the equity. So the assets equal the liabilities plus the equity. We can also very easily just say here are the assets, all the debits adding up, minus all the credit balances, gives us a balance of 153.97, the equity balance. So it's really convenient to set things up in this way. Actually a little bit more bulky to look at what we are going to look at now, the balance sheet and the income statement. We can get a lot more from just this one line item of numbers in some ways in a pretty quick area, but it's in a way of debits and credits, in a format of debits and credits, and we can't easily give debits and credits to somebody else. The financial statements are something that we can more easily give to someone else without having to explain what is a debit and a credit. So if we go to the financial statements, we're just going to say these are being used to create the financial statements. So we picked up this number and this number we worked on, and so we'll go over and take a look at that. So I'm just going to go to the right now to the financial statements. We will create the financial statements at a later time. But right now, we just want to see that this is what is automated within QuickBooks. Where basically QuickBooks can just generate the financial statements from the data input. And we'll see how that process works, but QuickBooks is going to, or any accounting software is going to create all this stuff as we go, meaning the general ledger, the trial balance, and the financial statements. We typically, however, want to just jump to that end product. We enter the data input, jump to that end product, the financial statements, and then oftentimes have to go back if there's a problem. And so it's good to know how this thing is built up in order to go back and see what the automation is actually doing. So here's the cash account. It's being included in the total current assets and the total assets down here. So here's the total assets. That, of course, will equal the liabilities. Note that we have nothing on the income statement as of yet. We haven't made any sales. We haven't yet had any expenses. Note that the furniture, even though we purchased that and we purchased it with cash, is not an expense because all we did was trade one asset, cash, for another asset, furniture and fixture, which we have not yet consumed. It hasn't been used in the business to help us generate revenue. As it is used, we will expense it in the format of depreciation. And then we have our 150 down here, total equity, part of that being the investment that was input by the owner, the rest of it being the beginning balances generated as we put in those beginning balances into our accounting system, our accounting software, our accounting workbook.